Last week, the headlines were dominated by yet another inflation reading for the UK in double digits. It seems sticky inflation will be the core theme for the market as we complete the first month of Q2 this week. However, the markets are still clearly encouraged by what they're seeing as volatility is really being suppressed. But could this be about to change? Hello, I'm Connor Woods, one of the trading coaches at ForexSignals and howtotrade.com. Here is our weekly preview for the 24th to the 28th of April 2023. Now, with the Q1 earnings season on the way, it's important to remain on your game regarding your research and preparation for each trading day this week. This is because major companies are set to release their earnings reports this week. And to be honest with you, it doesn't get much bigger than Microsoft, Alphabet, Amazon, and Meta, who are all releasing Q1 earnings across Tuesday, Wednesday, and Thursday. This is likely to greatly influence the market sentiment this week, particularly in the equity market. But week 17 also provides a steady flow of data too, with the event of the week coming on Friday when the US core PCE price index is set to be released. Remember, this is the Federal Reserve's primary tool for measuring inflation. Let's dive into this week's best opportunities day by day. Now, Monday's session might be slightly subdued with a bank holiday in New Zealand and Australia. When the European session kicks off, we may see some action in European indices as the German IFO business climate data is set to be released. Now, this is a leading indicator of economic health, and a reading below 90 could cause a sell-off in the popular and volatile German index, the DAX, also known as the Ger 30. Now, been on a remarkable run really since October 2022. Has had pullbacks along the way. Sort of if we measure those pullbacks itself, we're talking 7-8% pullbacks along the way, maybe that's about 5%. And what you can see is what I've noticed up here. This is from a daily chart perspective. Okay, yes, brilliant. We have created a new high here on the DAX, but look what's happened to that RSI, at that same time. It's remained very flat, if not ticked down ever so slightly. And that's a sign of bearish RSI divergence, which shows that this move that we see to the top side hasn't actually got that much momentum behind it, and is losing momentum rapidly. We've had that first Thursday's candle was sort of the first time we saw some selling, and I'm wondering if we're going to get sort of a 5 to 6% correction now, on the DAX from that all-time high, which would take us down towards that 100-day moving average, and we could start to see the beginning of that move this week. On Tuesday, traders will find out just how much confidence is being lost in the US consumer when the Conference Board Consumer Confidence figure is released. Now, this is a monthly release, and with the financial confidence being, the main indicator of consumer spending, expect this to be probably the main driver of volatility. However, this was likely to be heightened by a huge day for earnings when tech giants Microsoft and Alphabet, Google, released their Q1 earnings report. The Nasdaq's going to see plenty of action probably after the closing bell here. Now, interesting what we see on the Nasdaq itself, because when we mark this move sort of top to bottom, really that swing Fibonacci level, you can see we did break above that 38.2%. So you could argue here that when we zoom in now on what we see right now, is potentially we've got this bullish flag forming on the Nasdaq. Now, I think that the company valuations are still overvalued. I think the earnings report is going to come in a little bit weaker than what's being predicted right now, and that could cause a break below here. So I'm willing to play both sides. Any beats in the expectations, we could see a break above, and really if we get that break above 13,240, then really I could see a move up towards this 50% of that huge swing move, filling some of this imbalance that we see on the left-hand side, and really coming to test this point of resistance up around the 13,600 level, which would be a fantastic move to the upside. Now, Wednesday is likely to see a volatile Asia session when Australia releases its Consumer Price Index report, which is the primary tool for measuring inflation in a country. Now, recently, the Reserve Bank of Australia has said that inflation is probably past its peak. However, a current rate of 6.8% is something that the Reserve Bank will want to get down at a faster pace than it currently is. Now, AED/USD has been consolidating really over the past few weeks, and I think there could be a seismic move on the way here. You can really see that, if I get my drawings back up on the chart, you can see that breakout below that channel there, but really it's just been a bit stuck. After that move to the downside, it's just been stuck between that, basically the meat of that candle, really. It's just been stuck there. A little bit of a fake out to the top side, and really it's just not too much happening in terms of a generic move. Now, I think there's a big move coming here, and the reason I think that is because we had the initial sign that AED/USD wants to go a bit lower here, and then when we actually zoom in, what happened is, traded a lot on that dollar weakness. We traded higher. We took out these highs. We flushed out these highs into the 100-day moving average, and then we just completely, slumped back to the downside, sort of 1% and then minus 1% instantly within a couple of days. And now we've got that golden crossover, the 50-day crossing over that 100 and the 200. Every time we've retested that, it's acted as resistance. And I just think that potentially what we may see is if we get that daily break below, 66180, that could be the linchpin which sends this into this market into a new low. Of course, there's a situation where maybe inflation comes in a lot hotter and we break above, but at the moment there's just so much resistance sitting around these levels. I think we're shaping up for a move to the downside. Now, Thursday will be the day the world finds out just how well the US economy performed during Q1 of this year. Surprisingly, the previous 2 quarters have actually seen GDP, gross domestic product, readings come in higher than forecasted, beating expectations by 0.3% on both occasions. However, I think the data seems to be deteriorating across the board, and this could spell trouble for Thursday's release. Look for a reaction in gold here, which is just starting to shift its momentum. Now, remarkable run up in gold. No doubt that we can clearly see that gold has been trending to the upside, and there's been some fantastic buying opportunities in the trading room from that. But look at this RSI divergence. It's something I've spoken about, and we've got it here really, really clean. There's that move lower on the RSI. There's the move higher in the market. This recent move higher in gold didn't have much momentum. We can see it's losing momentum right now. And when we look at it from a 4-hour chart perspective, I know initially it's going to continue to find support. I'll be surprised if it doesn't. And the thing that bothers me about this is that this 2050 level is yet to be taken out. So potentially what we might see is gold continue its move lower into this 200 SMA, into our demand zone, up towards the 2050 level, and then more of a generic move to the downside. This market can move quick, and it's about trying to catch in momentum as you can. But that's my core play. I think we can reach 2050, but from there I think we may start to see more of a move back down towards the 1900s. Friday is all about the core PCE price index, the Federal Reserve's primary gauge for inflation, and despite headline inflation seeming to cool, core PCE remains sticky and highlights the excess liquidity I think still circulating around the economy. Although tentative, there is a possibility that traders will also be able to view the Bank of Japan's monetary policy statement followed by a press conference. And I'm wondering if the Japanese yen is oversold right now. Here I've got the Swiss franc versus the Japanese yen. Yes, remarkable move to the top side, but this is, sorry to bang this drum again, but this is the clearest RSI divergence that I've seen for a while. Huge, breakdown in the RSI, yet it's still grinding to the top side here. And if you scroll all the way across, this is actually a 1-hour supply zone within this wick. And you can just see, we've just started to see that reaction as it stands right now. And I think that potentially, given the nature of the move we've got here, there's not much imbalance, and it wouldn't surprise me if there was more of a generic move lower. This would support sort of potential safe haven flows in the Japanese yen, maybe a change in yield curve control, which is being rumored, and we could potentially target 147.5. That's not an impossible target here for this Swiss franc Japanese yen market, and I think maybe we can come and fill some of this imbalance here. All of this is balanced and I think is vulnerable to be taken out, and that RSI divergence is really clean to see. Week 17 is a huge one for the markets, led by US mega tech releasing Q1 earnings reports. This will only add to the volatility we're already likely to see in the US markets this week, because of the focus also being on the core PCE price index. Some of the biggest moves may occur after the closing bell, so it's important to take extra care with your trades this week. Either way, our team of coaches will help guide you through these opportunities every single day in the trading room, ensuring a high quality service as we cover all of the events for you in our live streams. We're also proudly producing streams covering the specific lessons in our new academy. So if you want to learn how to trade or you want to know more about the markets, our academy is the perfect place for you, and you can access that in our trading room. Until then, trade well, and we'll see you on our next live stream.